If you're married or in a relationship, sometimes it may be a little confusing if you should both be on the loan or if only one of you should be on the loan when you're buying a home. And we're gonna give you some tips today that may help. So when you're buying a home and you're in a relationship, it's awesome, right? Because you have two people who are able to combine their resources, combine their accolades and everything that they've done to impress the bank to qualify to get the type of home that they want. But sometimes there are some downsides to having both partners on the loan. Now, regardless, whether both partners are on the loan or not, sometimes the issue comes up. If anything were to happen, who has rights to what? If you're in a community property state, then you're good either way. One person can be on the loan, but no matter what, if you're married, you both have to be on the deed if you're in a community property state. And if you're not, well, you're not, and you may want to ask some questions. But let's get into the reasons that you may consider both not being on your home loan. Number one is credit, right? You have to look at the credit. Sometimes you may have a situation where one partner's credit is so much higher than the other person's, where if it was just that one person, they could get a much better interest rate. They could qualify for the same amount because the income, like whether your partner is on there or not, it doesn't affect anything. But if they're there by themselves, they get a better interest rate, they get a better monthly payment. Maybe they qualify for some other incentive or grant programs to purchase the home for down payment or closing cost assistance. And so credit may be a reason why the lender recommends to you not having both of you on the home loan. Another thing you want to look at is debt, specifically debt to income ratio. So going back to credit, the best thing that I always recommend is you both applying for the home loan and then let the lender help you be strategic to see what do the numbers look like with you both on there? What do the numbers look like with one of you on there and then the other? So we can look at all the different scenarios and determine how you're gonna get the most bang for your buck and how you're gonna get the best deal, right? So when it comes to debt to income ratio, it may be a situation where someone's debt is hurting the group, right? It's just hurting the group when they factor it in. And so sometimes it'll allow the mortgage rate to be better and the monthly payment to be better and qualify for more of a home. And then the third thing is being strategic. Sometimes it just pays to be strategic. Let's say you have a 2-year vision or a 3-year vision or a 5-year vision, and you know what you want to do in your relationship or as a family. Sometimes you may strategize and say, you know what? Let's have the debt built on one partner's so that when we want to do this other big purchase or we want to open up this other business or we want to do X, Y, and Z, we can do it in the other person's name. So being strategic in terms of not just what you want to do now, but what you want to do from a long-term perspective, it may make sense to only have one of you on the home loan as opposed to both. But my recommendation, like I said earlier on, is to have both of you fill out the loan application and then strategize with your lender, look at all the different scenarios and options and figure out what's going to be the best options for you. Thank you so much for watching this video. Don't forget to subscribe and hit the like button. Keep following us. We have more great content for you. Hope we'll engage with you soon. Appreciate you.